Okay, everybody. We are on. Dun, dun, dun. No kidding. Sorry, I'm trying to have my own intro here. Just never could come up with any good ones. It's okay. It's okay. Life is good. Life is grand, but we will see what's going on here in the world GME. But hold on. Before I speculate further, let me put some hold on 1 second, you guys. Little fluff. Howdy, what's up? How are we doing, Michael? Are we thinking about borrowing money to leverage onto our favorite stock, or what? What's happening? No, I'm kidding. Don't do that. Do not advocate doing that. Refrain yourself from doing that. All right, so let's take a look at, of course, I was opening up Twitter, and everybody's mentioning how the German market is open on Gamestop. Apparently, it's still trading right now. So this is a 30-minute candle for that particular market, and apparently it's up. Right now, it's trading at $23.13. Okay, so there's a lot of like consolidation here. There's like, what is this? What kind of trading is this? So I don't know. It's this the type of manipulation that is happening in the foreign market. So this is again from Germany market for GameStop. So I don't know how that would work out. Of course, today for the US market on GME, we are closed. We won't be open until tomorrow morning. So of course, I'm sure the eyes would be following what Robinhood 24 hours trading is going to do, what kind of shenanigans that they're going to pose again. But hey, the stock is up and there is a gap over here. Perhaps it needs to be filled again. Again, it doesn't have to fill. This gap was left from Friday. So Friday close was around $19 or something like that. But this is, again, Germany trading market, a Germany market. So it might be a little bit different than the American market. Just be aware of that one. So yeah, it's currently is trading right now. So let's go back to our American market here. NASI or whatever. So is there hold on, let me see if there's any gap. For sure. Okay, so this is a 1 day. Of course, it's hard to see the gap yet because the aftermarket, we all know that it went up to $24 or close to $24 right there. So tomorrow morning we would see this gap right here. So depends on when it opens, we'll see more on that. So but if there's any gap being made around here, just expect that it might fill at some point in the future. So even though I'm excited for tomorrow, I'm gonna tame my expectation a little bit. Now I'm the type to kind of hope for the best. Prepare for the worst, hope for the best type thing. So if you are experiencing that, I think it's at least you're prepared for the worst, right? So that you have ammunition to prepare for the opportunity of a lifetime too. That's my thoughts. Now, let's do, okay, let me read. Michael, very low volume in Germany, so not sure how it's compared to the US. Okay, but green is good. Okay, that's good. I know, like, there's probably some sort of, like, can they use the foreign exchange, the way that it was traded in, I mean, the stock itself, right? Can they use the gain from today to manipulate the price down from the US market? I don't know how that works. So I need to, kind of research more about that. How the two trades and how the volume kind of related to that. I don't know how I formed that question. Hi, Miguel. Moas in 2 weeks. All right. 100J. Okay, where's J? I don't see J today. Okay, so why am I up here? Okay, hold on. Let me kind of promote GME real quick. So what I saw on GME page is a promotion. And again, this is indicative of a great business, right? In my opinion, no matter what, we're trying to get more customer, more feet on the door, on this doorstep of GME. And, we've been promoting this, 23, May 23rd there. And of course, we have our own credit card over here. And this is the promotion that was like, yeah, of course, this is a no-brainer, right? You want students to come and, kind of customer loyalty, right? And you have to start them from the young age. So again, we are indoctrinating people, younger people to shop at GameStop. And we gave them discount for doing so. Obviously, again, this is better business practice, right? And it's a way to acquire customer without, costing us too much. Now, again, this is just a promotion, and hopefully it's not going to eat too much up into our profit margin or anything. But if you gain customer for life, they're going to keep coming back for more, for whatever we're selling. So whether it is a trading card right here, if you look at this, hold on. Yeah. If you look at, get into gaming, collection, cosplaying, and that's probably alluding to, like, at some point we're going to sell, equipment for cosplayer, right? People love to dress up and, go to the convention or whatever. So yeah, that's a good idea. Hopefully, who knows? Who's the company's going to come to partnership with GameStop or whatever. It's a lot of stuff moving forward. So very exciting, on the ground, brick and mortar, and also customer acquisition kind of play there, right? For the health of the company, let me stress that. For the health of the company. That's important. Okay. And yeah, so when you do that, people are gonna come back for more. I think that's a good idea. So leadership, always trying to find ways to increase that revenue, right? Now, when that top line revenue address, we'll see what these people are gonna say about GameStop, how GameStop is so worthless, right? Just so that people could understand. Okay, well, sometimes it takes some times to turn the company around. And with this leadership, they have been doing it for 3 years and more years to come. I'm not saying that the challenge of, retail business is over. But half of the battle is already won, meaning that the the fact that we're not burning as much cash anymore, and having a clean slate at this moment is monumental. While everyone else in the business, retail business, are struggling. Okay? How do I know? Well, if you look at Best Buy. Let's go look at Best Buy real quick. Because people might not understand, like, okay, why am I saying that? So, why Best Buy? Well, they sell electronics. So, of course, this is not, a fair comparison. Obviously, Best Buy has, more revenue. But, this is the company that we want to beat. Okay. So net income right now is $1.2 billion. That's fine. That's fine. And so let's look at the health of the balance sheet for Best Buy. Wonder where it will open tomorrow. I know it's probably like close to 25 or whatever the German market open or close. I think that would be a good price point to go by. Most of the time, I don't know if it's always like consistently like that, because I haven't kind of compared the open and close for the German market or any other market that are trading GameStop right now. Perhaps they have their own independent way of kind of trading, so I don't know how the policy for trading, whether they are allowed to naked shorts or not allowed to do options. So that's another layers of of additional research that we have to do, whether it's going to affect the American way of tradings. So again, like every country has their own laws, rules, and regulation. And so that's going to affect the price as well for any given stock. So it's really hard to kind of compare, the two. But yeah, green is good. Like you said, if it's, it just shows the sentiment is flipping, right? Yeah. Anyway, go back to Best Buy. Okay, so I take a look at this company before in passing, obviously not in depth or anything like that, but look at this book value ratio. Currently, they are trading at 5%. 5 times its book value, right? So, by comparison, it wouldn't be well off or off the rocker if we say that. Okay, since Best Buy trade 5 times its book value, and we know that book value for GameStop right now. Hold on 1 second, you guys. Give me a minute here. I want to look for my spreadsheet here real quick. So the point is that if GameStop were to trade at 5 times its book value, what would that give us? I think it would be closer to $40 a share. That's fair value. Wouldn't you say so? Okay, coming back. I think you've seen this one before. I know I'm a bit boring. I think it's good to be boring a bit, right? Just to tame the expectations so that people are not hyped up too much. I know. You should be hyped, but I'm just saying, like, yeah, sometimes you gotta prepare for a bit here. Okay, 1 second. Okay, so this is why I kind of got my price level from. Okay, so currently, assuming that the fund that we were raising back in a couple weeks ago is going to be recorded in the shareholder equity right here. Shareholder equity right now with the fund that we just made on Friday, or announced on Friday, is going to give us $2.2 billion, right? And then if you divide that by the outstanding share currently, it's going to give us around $6 or so. So I'm gonna, again, like this is in a ballpark. So it's fair to say that, conservatively, $6.40, 47 cents. So let's do that. And if you times that by 5, that's going to give us a fair value. Well, based on what Best Buy is trading right now, right? So let's do 5 times the book value right here. That will give us $32. So in with that case, I am going to lower this to 32. Again, fair value, right? Anything below, in between, I am going to add less, and then anything above, I will stop buying for my long term back, okay? Until the MOAS or whatever, right? If it MOAS, obviously I'm gonna sell most of this in my portfolio in order to come back at the lower price at a fair value evaluation afterwards. So I just want to be clear, because that I'm gonna hold on to the share for GameStop in the long run, right? Is it gonna be a forever thing, like diamond hand or whatever? No. As long as the price point that, if it's, again, MOAS, I don't know, again, what, 1,000, 2,000, 3,000, that's a crazy amount of money not to kind of like sell at least the majority of the moon back, right? But in the meantime, just in case that price never come to fruition, at the very least with the run, like a simple run, would suffice, right? I will take profit at these type of level right here. Now, when it comes to a fair valuation here, this is the metric that I will use forevermore until GameStop could add more value into the company later on. Then I will reassess this one too. So, but yeah, as if the current valuation, this is the price point I'm going to go by. That's a good sign. Okay. What else? Okay. So again, this is a good price point to go, a good metric for me to kind of come up with my own, price level there. Okay. What was I saying? Okay. Of course, like they have not report the quarter one yet. A couple more weeks to go. That's fine. So let's do Best Buy here again. Of course, PE ratio is going to be skewed a little bit here because we haven't, completely transitioned into a normal business practice. And again, we don't have any data to back up on this leadership quite yet to know whether GameStop going to be able to achieve a kind of like reasonable PE ratio, right? Because if you look PE ratio right now, it's skewed by the fact that they've been kind of like $6.7 million right there. And again, like news gonna try to steer you away from that. It's like, oh, look at their PE ratio, they're overvaluated, and all that stuff. All of that, again, not telling you the whole story about how this company has been pummeled, right? Meaning suppressed. Not in terms of the price, and also to suppressed by the old leadership that hasn't been doing anything to improve the company bottom line, right? Or on the ground up. And so current leadership has been doing very well to clean up the balance sheets right now. Okay, so book value at the current price, obviously it's going to change quite a bit. So depends on the price action. since we've been expecting a big price move, it's going to skew it either way. So it's hard to kind of go by with that one. But the most important one is, of course, the quick ratio. If you look at the quick ratio, this is GameStop 2.11 versus quick ratio for Best Buy. Best Buy has the worst quick ratio, which is 1. So if you look at the definition here, current asset versus current liability. You want more asset than liability for the company to at least have better leverage, right? So if you could argue, I could argue that GameStop has a better leverage in times of need. Let's say there's a market crash coming, right? Not saying it's going to happen. Black swan event or whatever. Sell off. People panic. Pull their hair out, you know. Everything sell, right? So that's how crash coming. So be prepared for that one. And so what I'm trying to say is that if there's a downturn, a quick downturn, GameStop would have the ability to protect themselves much more than Best Buy, right? So that's why the current ratio is very important. Now, as far as the quick ratio, cash, short-term account receivable divided by current liability. So currently they, for Best Buy, they only have 30% cash versus its liability, right? So if you look at quick ratio for GameStop, much better, in a better position. And I'm sure it's probably much better now because they have more cash on hand currently. So this quick ratio, it's probably going to be at least 2 point something now, right? So even much better than that. And I'm sure this is going to change as well, you know, based on the cash that was just raised by shareholder. And perhaps we are going to just pay off the debt. The short-term debt that we have, operational debt, not long-term debt, not interest accruing debt that we have. So the only interest accruing debt that we have is only $17 million. Sorry. So technically, we could just pay that off by just marketable security, and would be completely debt-free, no tie to anything. So yeah, technically we could even lower this to a negligible level. Now, if you looked at what is it called? Best Buy. So with Best Buy, look, they have more debt than equity. So a sign, I mean, I'm not saying it's going to go bankrupt anytime soon. I'm just saying that if there's a downturn, a sharp downturn, who has a better chance of survival? Okay, a small company that has more asset than liability, or a big company that has more debt than its equity, right? So shareholders in this company is going to have to, at some point, the company is going to go to whoever, right? Let's say leverage even more to try to survive the downturn. So shareholder equity will have less. Sorry about that. I mean, shareholder would have to be diluted at some point, right? So yeah, there you go. So Best Buy has more debt than GameStop. Of course, they have the ability to pay off the interest. That's fine. That's why Almond C's score is above 3. That's good. You know, meaning there's no risk of bankruptcy at the moment. Hey Carter, what's up? Just left GameStop. Oh, great. Getting a birthday gift for the kids. Oh, that's so cute. Thank you. I am going now. Pray. Okay, great. Pray that it's done. Well, good luck. Thank you for popping by. Okay. Let's take a look at... All right. So currently we have a better gross margin. Okay. We still have to massage this This profit margin, so the fact that we have like higher gross profit margin than Best Buy, that's a good sign. That's a good sign, right? So we just need to massage a little bit more of a operating margin right here, right? So hold on, yes. So we need to have a better operating, margin. So if we could kind of solve this problem right here, it would be, we would be a lot better in profitability than Best Buy, right? And it's coming. I mean, I have no doubt that this leadership could pull it off. I mean, the fact that they do it already for 3 years, keeping this company not only survive the downturn of, short attack or media attack, onslaught of people just bad mouthing the company, everything, surviving against all odds. Yes, retail was the one who picked this up. Yes, dumb money was the one who saved this company, but Ryan Cohen and the leadership that is in this company is a crucial point, key for retail to back him up in that sense. Of course, now I'm sure institutions gonna keep increasing their holding in this company years to come, and they're setting up end up that way. It's up to retail. If retail are paper handing and not wanting to own anymore, that's on us, right? It's on us to whatever share price point that you're happy to sell, make sure that you're happy with that, right? And don't ever look back, if that's what you want. But to say that this company has no value, a shitty company, it's just a hype up on the other side, right? I mean, the fact that we are able to raise $1 billion at a price point of $20 per share, more than $20 per share, it's a good thing. It's just indicative of, okay, at least somebody, maybe a large institution, because we've seen a lot of volume coming in. So that's why I don't think it's just retail, because retail has been accumulating like crazy. We all know that. And, just think about how many more shares do you have now than 3 years ago? And again, because the consistency that retail has been, like, I know personally, I have more shares than I had before, when I accumulate, close to 3 years ago. So come this November would be my 3 years anniversary of, establishing the position in GameStop. So again, and then of course, if the price is at a lower price like this, I'm going to accumulate more until I hit my price point that I think, okay, I could sell now, right? And I'll tell you exactly what price point, and I kind of like show you a little bit already of my strategy moving forward, which is to kind of chip at the block a little bit at a time. That's, again, I do this strategy because number one, I'm not good at, trading, at looking at levels of price, which one to sell, where to sell. And so, and with this type of movement that is to expected in the next 2 weeks, I don't want to miss out on that, spike or whatever. So there you go. Let's see. What else do we have here? Okay, so this one, debt to EBITDA. So for Best Buy, okay, so inventory, this is a sweet spot to be in, right? 6.7 for Best Buy. How about for GME? Around that. Yep. So our inventory is even turning over a little bit slower than Best Buy. So the higher this number, the higher the frequency of inventory turnover. So I I mean, it's pretty compatible. Come on, like 6.05 versus 6.7. So it's not that much of a difference. I mean, the sweet spot for inventory, if you search in Google, is around 6 to 8 or something. Yeah, because you don't want it to be like 10. That means you have to keep on buying. That means you don't have enough inventory on the shelf and on hand to kind of overturn it. So the sweet spot is around 6 or 7. Okay. What am I looking for here? So price target for Best Buy. Of course, there's a lot of analysts out there want you to buy into Best Buy. And if you look at their financials over here, trailing 12, look at the income statement, right? So revenue down by 6%. This is year on year, right? The same quarter, trailing 12, 6%. But if you do the quarter, they've been down as well, right there. Annually, 6%. So every retail out there are trending down, okay? Meaning that everyone is struggling. But if you look at the other trend as well, that I think it's probably more indicative of what's happening, going on, is the income statement. So the income, net income right here, it's trending down 12%, 12%, 17%. See what I mean? While GME, if you look at the trend on GME, it shows a different story. Right here. Now, I don't know why they don't give you a percentage over here. See that? Percentage growth. Is it because GME, they don't want to show a good trend? Or what? It's so weird. See, there's no growth. They don't show that. But if you do the math, growth for GameStop is in the green for net income. So net income went up, but the revenue comes down. So that's the only difference there. Wow. For Best Buy, their revenue comes down as well as net income coming down too. So I'm sure that's due to, right here, the interest payment that they have. Of course, it's only $52 million a year. The company of this size, with that interest payment expenses, is not going to cripple them or anything. But of course, like sometimes you have this. Okay, hold on. Often a negative number implies that the company could receive more than it spent. Okay, so they just had this category here to kind of offset whatever they had to do. Or offset the interest payment. So not sure what that entails either. So but yeah, currently they are profitable, and the fact that they have more revenue over here, that's why their net income is in the billions. At least it's still positive, although it's declining in growth, in percentage wise. And so, I mean, my conclusion, of course, balance sheets, the health of the balance sheets wise, the fact that we have more cash on hand than Best Buy too, I think that's worth noted, right? So currently, Best Buy has 1.4, and because we just raised more money, our cash on hand is going to increase by $1 billion. So that means we have $2.199 billion in cash. So that's good. So that's going to increase our balance sheets a little bit here. Very exciting to see what's going on in the annual meeting. So, okay, so let's doom and gloom a little bit. I finally caught you live. Oh, thank you. Appreciate you. Not much, very tamed in energy. I'm trying to tame myself a little bit here, try not to kind of FOMO in coming tomorrow. I say that and then I'll FOMO. But we'll see in the market condition. But yeah, thank you. Appreciate you coming in. You come in the right time, Casper. Casper, am I saying your name right? I'm sorry to kind of doom and gloom a little bit here. You know what I like to do though? I like to kind of, and I said this before, prepare for the worst, hope for the best type of thing, right? Because life is not always rosy all the time, so you gotta prepare for the worst. So here's what I expect. So my speculation is, of course, why would Ryan Cohen, sell the shares? There's so many speculation as to why. Of course, and there are good ones, that maybe somebody's already have a hand in it and partnership with him already, and do the ATM at the price that makes sense. Why didn't he sell up here? Why didn't he wait until next 2 weeks? Perhaps there's another angle to this, right? Of course, he's not a dummy. Like, he's in the space of a billionaires, and he's in that circle. And he's probably is aware of what's going on in the market, much well worse than us as a layman people, right? As retail. And so he's probably have so much data in front of him to say, okay, perhaps there's a black swan event that's coming. That we're not going to, even with the balance sheets as stellar as we have, we're not going to survive the. Now, when I said survive, I mean the price of the stock, okay? I want to be clear of this. I'm not talking about the company. This is why I go into the fundamental first. Then, do the speculation on the price of the stock. You got to separate the two. And my speculation is that Ryan Cohen is probably understanding that there is a market crash coming first before this, right? And I think that's in line with this guy. Now, I listened to this guy before. Now, of course, I listen to Miranda all the time, but this guy right here. So let's listen in. I'm sure you guys have seen him before. I've shown his videos before. Very knowledgeable. Of course, I don't agree with everything he said about GameStop. Of course, he hates GameStop. He never covered GameStop or anything like that. But it's worth noted other stuff that happens beside what GameStop could. We don't want to echo chamber a little bit on just stock always goes up and never comes down type thing. So not to say to sell your position. That's not what I'm trying to say. Is that there might be an opportunity for you to scoop GME at a very low price, even at under 20, right? If the black swan event comes. So let's listen to this one, and perhaps we could prepare ourselves for that low price too.
My hands. And I want to share it with you. I want to summarize it with you so you are the best informed investor out there and you know how to make money out of this. If you really want to learn how to make money, join me also tomorrow, Tuesday, 8 p.m. Eastern time for a live trading training where I will show you how I
I'm sure he's knowledgeable. I'm not a member or anything like that, but yeah, if you want to kind of subscribe to his channel, very, very informative guy.
It made over 100% return on capital employed in 2022 and in 2023, and we're doing pretty nicely this year. And it's for beginners. You don't need to know a thing. Just saying, number one, the trading floor is showing that after 5 weeks of buying, hedge funds have now turned around and they've actually sold US shares, not just last week, not just sold, but actually are selling at the fastest pace since January this year. And that's a significant event that we should bear in mind when we're looking to, YOLO into the market here. And I'll come back to what is actually the smart strategy right now in just a moment. But they were selling index and ETF trackers, basically. They were selling single stocks, so individual stocks. They've been doing that for three weeks, by the way. But the fact that they're selling the index is new. And it's the largest net selling so far this year. So it's the largest sales event from hedge funds so far this year. And they were selling not just some sectors, they're not just going, oh, Nvidia may be too expensive or something. No, they're selling actually all 11 sectors, the whole freaking market.
So my point is that, see, I'm sure Brian Cohen has this chart and, is available to him at all times because he is an investor as well. And this is what people are missing. He's a very smart guy, very informed. I'm talking about Ryan Cohen here. Of course, I'm kind of like a big fan of what he's doing. But again, I can't pretend to know him personally. Of course, this is my speculation based on, the knowledge that he have. I'm sure he's very well versed of these type of data and or have people very well versed in this type of thing as traders, as informer, board of director who knows the ins and outs, who knows the economy much more than us. And so this is perhaps why he thought, okay, if we get $20 a share, that would be a good strategy moving forward due to this type of data coming to his desk, right? That perhaps there won't be any spike currently. Look, I'm not trying to deter you from MOAS or anything like that. Just to prepare you, perhaps there might be a dip first before the rocket moving forward, right?
Industrials particularly is probably one that's notable because they've been selling that for like 2 weeks in a row now. So that's maybe something to think about. But if you look at number 2 then, US share sales.
Hey traders, today is your very last day to get free membership access to the complete trading course I normally sell for $9.97.
Just a little bit different to hedge funds, right? It's just like the broader market. What did we have last week? Well, we had relatively hawkish Fed speak. We had a relatively cautious commentary from central bank, from banks generally, JP Morgan and so on. The Fed minutes were a little bit more hawkish. Some of the software earnings that came in were a little disappointing, and less volume. Just people, I don't know, go on holiday or something. Probably all the bankers are in, I don't know, Connecticut or something like that, and therefore, volumes dropped. But you did have outstanding results from Nvidia, and it, went up like 15% or something crazy. So what does that mean? Well, there is still some positivity from the market overall in buying, particularly into tech and into healthcare, and also somewhat into energy, which is something that we've been highlighting for a couple of months now as a good opportunity, I think. I'm going to skip, I think, the futures because most of you probably are not futures traders. So I'm going to just like skip over number 3 here and go back to number 4, which is derivatives sales. What the heck does that mean? It's basically options. So like the kind of call options, put options, that kind of thing, which is something that I do. And they're basically saying right now, fear in the market, and this is really important to understand, and most people don't understand this. Maybe people are not even aware of this. Fear. The VIX index, VIX, is at the lowest level it's been 10 years, basically, pretty much the lowest level it's been in 10 years. And what does that mean? It means nobody is protecting their portfolio. No one's thinking there could be some risk event here. And everyone's just saying the sun's going to shine, the sky's going to be blue, and la-di-da-di-da. And is that an opportunity? Yeah, frick yes. Of course it's an opportunity. Why is it an opportunity? Because we can, if you understand options, you understand we actually make money out of volatility. That sounds abstract. But to make it a bit more concrete, options right now are the cheapest they've ever been in the last 10 years. So the smarter thing, say if you're bullish the market, would be, in my opinion, to buy a call option or maybe something slightly more complex and not buy the stock, because your upside's greater, your risk is lower, and it's very likely that volatility will go up at some point and you will benefit from that.
So I think this is important too, why call option in GME is so stupid, right? Look at this. Hold on. I think that's kind of tied into why there's such a large volume in call option in GME. You know, again, perhaps this is the dynamic that was sold to the market. Now, what I was going to look into is how much of the put option is in the money, right? So if you look at this right here, 15,000 contract right now in the money for this week. So there might be a downturn first before you see the upturn, right? Now, as an investor, for me, long-term investor, this is good for me, right? Because of course I'm going to look into averaging down even more. I know people are probably thinking I'm crazy to think that there might be a downturn coming here. I'm not trying to scare you or anything like that, but just think about it. Adding another layer into this to amplify your knowledge a little bit, or my knowledge. I'm not trying to say that I'm smart or anything. Hold on, let me see. So the point is that, like, see this? This is 9,000 contract right here. There's a volume. It's open chart. Hold on, why am I? Sorry. I'm trying to explain my point real quick. So if you look at the open interest for this one right here, it's 4,800 contract. Okay, so at $15. So perhaps this is going to be a support moving forward, since there's so many contracts in the money, like for put option, obviously. Depends on where the price is closed at. Currently, the max pain is at 20. See right there? This is important because it acts like a magnet, right? Of course, as market maker, they have the ability to sway the market towards the max pain. And most of the time, it will close around the max pain. So this week is going to be $20. Remain to be seen, obviously. Depends on how many people jumping at call option for the later date as well. We will see if this week is going to, pull it down to $15. If the put in the money put option will be greater than call option. For this one, you could see kind of like equal over here, equal, somewhat, well, more call in the money. And then for this one, more put is in the money. Okay. Now that could change again based on the price that we're going to see. Now, of course, look at this, 100,000 contract is in the money right now if it opens like gap up or whatever. So that could cascade too. I'm not saying it could go the other way as well. Like gamma ram or whatever to go up instead of down. But again, I'm just trying to prepare you. There might be a 1 week of downturn first before that rocket to the moon type thing, right? So that's why, or at least that's what I'm hoping, that they're going to bring it down to 15 first before that run that we're all waiting for, due to this dynamic here that is explained with Felix here. So I'm not going to play everything. Obviously, you could, I'm not going to, play his content but he has a good content to kind of be educational about the whole market at large. Very knowledgeable about the option chain too. I've learned a lot from him. So worth subscribing, Of course, he had more subscriber than me. Alright, so that's another point that I want to kind of preface that. So we become a better investor, right? That's all we want it to be. Now let's take a look at the implied volatility for Gamestop here. Okay. Now this website is pretty cool to see. Of course, it's a paid website if you want to pay more to see more data here. I'm not going to do that because I rather not pay for things. Casper, I made it to, wow, 6,000 share. Wish I had that much. Before MOAS began, that's good. Let's go. When you write GME at 19 in your header, wait, in your 19? Oh, okay. You know it's up about, okay, I see what you mean. I write 19. I usually use the market close for the US. So if you look at the US market, yes, I'm completely aware of the German market here. But of course I don't use the aftermarket number. I'm totally aware of the after hours, right? But 19 comes from, okay, where did I get 19 from? Hold on. I'm trying to explain right here. If you could see that. Oh, you can't see that, huh? Okay, so it's a market close. That's why right here. I think this is where I got 19 from. Boom, that body of the candle right there. I think you might see it a better right there. Market close. Close at even 19. So that's where I use it from. But again, you know, after hours, there's so many, hardly any shares being traded. It could be manipulated up and down at will. Of course, you know, this gap is going to be formed again. And this is why I think they are going to try to bring it down first in this week to fill that gap up again. So depends on how high it's going to go up. My thought is that it's going to try to fill this gap right here, up here. And perhaps if there's more enthusiasm in the stock, it's going to fill this gap and then coming back down again to fill this gap. Just my thought. Again, you know, it's no rhymes or reason about it. But yeah, thank you, Casper. But I hope that makes sense. Yeah, Germany market, they have their own rules and laws and regulations. So I don't know how they would, you know, how much it relate to the U.S. stock market. And so that's worth notice too. So just because it's going up over there in the Germany market doesn't mean it's going to translate to the U.S. market. At least that's what I'm willing to say for now. Unless I find a little bit more information about it. Let's not speculate. Yeah. All right. So let's take a look at another angle. I know I like to jump up and down, jump off and on topic. There's no rhyme or reason for me covering anything. Sometimes I'm just like randomly say, oh, you should know this, you should know that. Okay, so now I've watched this guy a lot and, you know, just trying to gain some knowledge about option writing and all that stuff. And he's pretty successful at what he does. So let's try to learn from him as much as we can. And now he's bullish for Palantir. I'm not promoting Palantir or anything like that. I don't own any share at the moment, but it's worth noting his strategy, and you will understand in a minute why I show you this one. Jimmy looking good. Sure. Michael, try not to tempt people. Too hyped. Okay, no kidding. Okay, So let's listen in, and I will come back in a minute. Okay, let's speed him up a little bit here.
Right now to show you my opinion on Palantir, my position, and where I think the stock is heading next. Because Palantir is actually a very hot stock for multiple reasons. Not only is the business very strong, the leadership is very interesting, the trend of AI is very good. This company is a full data company that has a lot of progress, growing rapidly, but it also has a very high social velocity, which is something that nobody talks about. You see, a lot of people on YouTube, we talk about Palantir because it gets views. Sad to say, but the reason why it's getting views is because there's a lot of people that understand that this company has a bright future. So there's a lot of people piggybacking off of the idea that this stock is growing, and they're creating more attention actually than I think it deserves. Not because Palantir is not a good company, but there's actually additional social velocity coming from Twitter, from all social media. So I think this is a really interesting stock for many reasons. Fundamentally, technically, the options look good, and there just seems to be a lot of attention to the stock. I've caught this stock years ago, actually. I've been making videos about Palantir for a very long time before everyone really started to push this stock. Now, the reason why people are pushing it is, again, one, I think that this is a very strong stock fundamentally, technically. For me, options, I don't know who's talking about options on Palantir, but for me, options on Palantir are absolutely beautiful. But then socially, so what I want to look at.
So all of that, of course, I mean, I could find another company that is the same exact thing, right? People, it's more popular now, right? And fundamentally a little bit better than used to. Now, is it on the platform of Palantir's growth or whatever? No. I mean, again, like I'm not saying that GME is worse or whatever, but the I guess the AI hype and all that stuff is kind of hyping this stock up much more than it should, right? Since GME is kind of retail-based business, kind of brick and mortar, and usually people are not too excited about it, right? But GME is excited about, GME has their own, excitement about it based on social media type thing, right? And the fact that the story behind it, all of that kind of pull into play. And then another point that is going to be important, so let's listen in more and it will make sense in a minute why I show you this one.
Right now is, first of all, I'm going to start out with technical analysis. I'm going to jump into my position as well here. Well, let's just show you my current position on Palantir. I don't have the biggest position, but I'm planning to buy more shares of Palantir. You can see here how I have a 3.5% of my portfolio in Palantir stock right now, with a total return of $1,800. Now, I have a decent sized position, $75,000 in this portfolio. I do have another portfolio. I have some more Palantir, but it's not that much more I have in my other portfolio. You can also see here that on my option position, I have made about $492. What I'm currently doing is I'm selling calls and puts on Palantir. So let's talk about selling options on Palantir and why it's so profitable. When a stock like Palantir that has a lot of implied volatility, okay, implied volatility is basically.
Now, keep in mind, implied volatility for Gamestop is much higher than Palantir.
How much the market expects a stock to move, right? So there's high implied volatility. The market is expecting this stock to be very volatile, meaning they think it's going to go up a lot, it's going to go down a lot, or maybe it's just going to go up and down a lot, and then who knows where it's going to end up. The market just knows that this is a turbulent stock. This stock has a lot of movement, and for that reason, it has more implied volatility. Now, as an option seller myself, and I have over 4,000 students generating consistent income selling options, the best thing that you can do is find a stock that has high implied volatility that is range bound, okay? A lot of people think you can't make money when a stock is going sideways. That is furthest from the truth. I mean, look right now, the 3-month chart on Palantir, this stock has gone absolutely nowhere. But if you're selling options on a weekly basis and it's not going anywhere, that's completely fine. That's why I've been able to make pretty good money. So let's just go over some examples. Let me go over the full thought process I have around selling options, because if you're not selling options for income, you're basically not looking to retire anytime soon. If you learn how to sell options for income, you are basically in control of your finances. And it only takes a certain amount of money for you to save up until you're generating X amount of dollars to retire, right? Whatever that number is for you. I have students that are making $5,000 a month, 7, 8, 9, the list goes on. I mean, I have millionaires as well. I also work with folks that have a small portfolio. It doesn't really matter where you are. You want to be selling options eventually. If you have a small portfolio, yeah, buying options is kind of more attractive. But as you build up a portfolio, I think the best thing that you can possibly do, sell options. I've literally retired, traveled the whole world because I'm selling options. It's the easiest way to make money online. Also has the most freedom. So if I just show you something like sell put right now on Palantir and I go to, let's just say a week out. Okay. I'm going to pick out a week out option. You can sell right here. You see, it's only $41. It might not seem like a lot, but actually this is a 2% return. 2% of 21 is about 42, right? This is 41. This is literally an almost 2% return thereabouts in just 7 days. So if you can do this every single week, that's about an 8% return on a very safe stock that has a lot of growth. So if you're selling put options, not a whole lot can happen. And here, 2% per week would have worked out literally for the past 3 months. So that's like 4 weeks in a month. That's 12 times in a row. You would have literally won 12 times in a row selling options on Palantir. Pretty crazy. 12 times in a row, because you can see by the chart right now that it's not going anywhere. It's going a little bit up, it's going a little bit down. So a lot of people are kind of frustrated. They're in Palantir because they see a big vision, big future, which I do, by the way. I just don't know when. Okay, I'm not going to sit here and pretend to be like Mr. Fortune Teller. Oh, Palantir is going to go up to this price at this time. No, I don't know. I think Palantir is going to be a $50 stock in the next 2-3 years. I think we can see a double in the price, but I don't know how fast. I don't know which earnings quarter is going to drive this the most. I just look at the valuation. If I look at the statistics, okay, looking at the statistics, this stock has a really good valuation. Yes, the forward PE ratio is high. The current PE ratio is also very high, but we've seen this with NVIDIA, a company that has high profit margins, which Palantir, granted, doesn't have the highest profit margins yet. I think they're going to continue increasing, but everything is just looking really good. Year over year quarterly revenue growth, 20%. CEO, fantastic job. Once Palantir gets into a business, you're not leaving. This is kind of like a software play, very similar to Adobe. Adobe has a very high price to earnings ratio because once people get into the Adobe suite, they're really not leaving. They're most likely long-term contractors. They have a job in the field. It's most likely a company using their software tools. So once a customer comes, they don't leave. Same thing applies for Palantir. And just looking at the chart, I don't need a good chart to make a lot of money. I can make a lot of money by just simply following a pattern. And the pattern could be sideways. Okay, so sideways pattern means
this AI trade finder will handpick you options trades every morning on autopilot. Hi, by the
means that this is a good opportunity for multiple different option selling. In fact, all option selling will work on Palantir. You can literally be a monkey and make money on Palantir. If you're losing money on Palantir, you're not following the right people. What you want to do is, first of all, just sell puts, okay? That's the most simplest strategy that I would use on Palantir. Right now, I am selling the $20 put for July. I would sell $20 puts for July, for August, for September, for October, for November. I would go the first next 1 to 8 months. It's fine. This is a window. I know it's a crazy big window, but listen, I'm telling you, if you sell puts on Palantir, the worst that can happen is if Palantir goes down, you will have to get assigned some shares. You shouldn't mind getting assigned shares if you like the stock, okay? If you like the stock, okay? I'm not going to force the stock on you. I really don't care. I'm not trying to force any opinions here. I don't have an agenda. My only agenda is to educate you, teach you, and of course, if you want to join my community, fantastic. But I'm not desperate for any of this. I'm just teaching you what I believe to be the best strategy and what I'm personally doing. I'm putting my money where my mouth is. I'm not going on this YouTube channel and saying, buy this, buy that. No, I'm actually showing you what I'm doing. I literally have real money in this position in multiple different portfolios. So I would personally sell $20 puts. Not financial advice because I'm not a financial advisor. Next, the thing that I would do is I would just simply buy shares and I would sell covered calls. Listen, a covered call is very similar to selling a put, okay? It almost drives me crazy when my students ask me, should I sell a covered call or should I sell a put? Listen, the thing is, they're actually very similar, okay? There's the same thing. If you sell a put option, you're saying that I want to buy the stock if it goes down. If you do a covered call, you already have the stock and you're just generating money on the stock that you already have. In both scenarios though, okay? Listen, both scenarios, you have about $2,000 into the position. I sold a $20 put. I have about $2,000 that is committed to this position. I sold a $22.50, covered call. I have the shares. So that's also about $2,000. So in both scenarios, I have $2,000 locked up and I'm generating 2% or 1% per week on my money. I literally want to scale my entire portfolio just using Palantir, but that would not be smart risk management. So instead, I'm not going to do that. But I think that having 10%, 15% of your money in Palantir is really good. Unless you have millions of dollars like me, you probably then want to start diversifying a little bit more. But then again, it just depends on your conviction level. My conviction level on Palantir is very high. I just have a little bit higher conviction on some other stocks, which, I email you guys all the time. If you're not part of my free email newsletter, then it's free. Just, find in the description. So right now what I'm doing is...
So, sorry, that was a long-winded one. So what he's trying to do, and here's what I'm trying to show you, and because he has such a high conviction in Palantir, you could technically copy that, and because I have high conviction in GME, right? So the same way, on top of that, because our implied volatility is much higher than Palantir, you could amplify that even more. Now, he was mentioning about covered call. Covered call, unless you're happy with the strike price in which you're picking, don't sell it. If you're not happy with the strike price, if you're happy with the strike price, then sell it. Doesn't really matter. I don't think it's going to kind of damper the run of GME. If the MOAS theory is indeed true, nothing is going to stop, nothing. And how many retail do you think have hundreds and thousands of trillion and gazillions of shares in order to sell cover call in order to dampen the run? So this is why I don't care. Like if retail suddenly sell cover call here and there, a couple one here and there, is going to stop the price movement. I don't think so. Again, only institution would be able to do that, and they do that in mass and at the very specific time as well. And so again, if you sell the covered call, you better know that the strike price that you pick is what you're happy selling GME at. Okay, so it's very important. Now, as a long-term investor myself, selling cash secure put is the best, right? At least you get, that implied volatility. And that premium, you could turn around and buy more shares. So that's what I've been doing, kind of consistently. Now, a lot of time I do a leap and all that stuff in order to kind of like generate a little bit of income, play that route as well. I bought some call and sell way too early. And so this is why I have my strategy divided up that way, so that I don't have the trigger finger to sell way too early and to not sell when the price spike or whatever. So again, just learning every single market structure out there in order to take advantage of this, this stock. Now, and the more knowledge you have, the better investor you have in this particular company. Just like the gentleman said, if you have a high conviction in this stock or any other stock, I just so happen to have high conviction in GME, right? And so, of course, I'm going to deploy every single strategy that I know on the market onto the stock in order to accumulate as much as I can in the long run, right? Of course, Casper has 6,000 shares. Of course, I could only dream to get to that point, but, I'm working myself up to that, right? Now, whether the MOAS happened within 2 weeks from now, I don't know. The more shares I could accumulate from for this company would be the best for me in the long run. And so if covered call is going to, if cash secure put is going to get me there slowly and methodically, I'm going to do that as well. So again, like if you write a cash secure put, right? Cash secure put, it just means that you need enough share or enough money to buy 100 shares. Okay, if you have enough money to buy 100 shares, you could pick that strike price according to what you have on hand and creating that premium. That premium is depend on the implied volatility right here. So currently, within 30 days, has been very, very high, which is 200, right? Palantir was like 60 or something like that. That's what was on that video. Let me see if I check it right now, what it is. Of course, when market open, it's going to be different than what I'm telling you right now. So let's look at the Palantir real quick. Oops. The Palantir. So for the weekly, you were to, oh, okay. So I said 60. It's actually even lower, 47 right now for the May 31st in a week. So much, much higher for GME. Obviously, we have a lot of volatility lately. The historical percentile for the normal range for GME is around 97%. So if you ever see 97%, that's pretty good for option buyer, okay, for this current period. Of course, it changes all the time. So you have to kind of be aware, monitor if it's time for you to buy option, right? And even that high implied volatility, it's too high for option buyer anyway. But because historically this company has been kind of volatile, it's always expensive to buy call option. And this is the reason why I think the most volume that is coming about 2 years, like the current volume right here, was not retail, because institution is the only people that have this massive amount of like influence in the volume of the stock, especially option chain, right? So, but yeah, be careful. I mean, to say that somehow a tweet caused this massive move is just a covered story that they want the rest of the world to know about GameStop. Again, to kind of deter people from investing in the best company ever, the best leadership ever, right? In my opinion, obviously. So you come up with your own conclusion if you're here new. And you're like, I don't know why these people think that GME is the best company. So, okay, we'll try to understand a little bit, no? It wouldn't kill ya. Would it? Would it kill you to understand why this company is such a popular company to be in? Anyway, okay. Where was that option chain? Oh, okay. June 21st. This is the one. So 100,000 translate to 10 million shares? No? 1, 2. Am I saying that right? Sorry. I'm kind of pooped out at the moment. Brain freeze. Okay, yeah, that's the 10 million shares right there if it gets exercised at that price point. So when it exercised, what happened? Market makers would have to go out and buy shares from the open market in order to deliver to these people. The only ways that this option would go in the money is if GameStop's going to close above 20. Doesn't matter. And depends on what premium that these people are buying into. It's going to be profitable for these particular folks right here. Let's just say you buy it at 300, or you buy this particular option call option at, let's say, $4. So that means this would be profitable for you to exercise if GameStop is at $24. So the break-even point would be $24. But if you want the shares, let's say it closed at $21 at this particular date, which is June, then you just exercise it because you want the shares, right? Even though your technically not breaking even yet, you still have the right to exercise to get that shares. Depends, if you're short or, or you're bullish on this company, you want to own the shares. Even with a couple, percentage down, you don't really mind that, because if you are a long-term investor, you're going to hold this company for a long time. And so perhaps somebody knows something about how the institution's going to jump in at $20.71. Remember, that's the filing that we saw. The average price GME or leadership sold at shares at the market offering, right? So this is why perhaps somebody knows, right? Some institution knows, and that's why the volume spiked that way. So retail don't have the money to do that at mass, right? Yes, we have like bets and all that stuff, just one contract at a time. Who has $400 to buy one contract? Come on, no one. We barely have money to buy a Big Mac meal. So we only been accumulating one share at a time, 2 shares at a time, and all that stuff, and we're all happy because of that. Just any amount of money that we have to put into the GME, we're happy to do that, right? But anyway, so I just thought that I would share with you the strategy that I want to employ. Of course, this guy has a lot of information as well on options, and if you want to learn more, you go ahead and subscribe to him too. Okay, I think that's all I have, you guys. There's no interaction here. I'm sure I bore you guys to death already, so let's just end the misery right now today, so that you have some energy for tomorrow trading. So good luck. If you want to kind of stay tame a little bit, perhaps there's some things that we're not aware of, perhaps because the big banks are warning their clients already, and perhaps this is what Brian Cohen saw. That's why he had to sell it now and be ready for the drop, so that he could scoop so much cheap company from the bottom up, right? Or from the bottom, and then ride it up when the economy is going better. Yeah, $2 billion in the bank, that's a lot of money to buy, any company, pennies on the dollars when the crash is coming, right? All right, that's all I have, you guys. I will